Traders, I'm looking at gold. 4-hour time frame. This is overextended. We've had a break of structure, bullish break of structure. I'm always looking at the previous swing high. This point here, we could pull it from here. That's fine. We'll just grab that down to this low, swing low. We have this entire move here, this price swing. And whenever you see a break of structure like this, we're always looking for, higher high, higher low, retrace, buy, expansion, retrace, buy. Right? So this trend kicks off, and the target is going to be the previous swing high. So this is currently tapping into the target from this base, right? And the liquidity that's resting up in here, buy stops that are sitting up in here. If this pushes up a little higher, it's going to, well, look, it's already reacted off the buy stops that are resting above these. You could see how it traded into that and then had quite a deep pullback. Now we're tapping into more liquidity, right? So this is overextended, and I'm expecting this to retrace again off this level, pull back. Now the thing with this is my bias is to buy, is to get long, but I'm not going to get involved with this at this level at the moment. There's a couple of things we can do with this, and I pointed this out in a previous video. When price is overextended, it trades into a level like this, into a previous swing high, this entire range, expect something like this. High, retrace, buy, swing high, retrace, buy. Okay, this is quite a nice, it's a neat trend, yeah? And then it gets overextended, and then we get something like that, right? Where this attacks the liquidity under here. That's, I think, something that I'm really cautious with this price action at the moment. So I want to see a deep pullback before I get involved. And then my involvement will be when this kicks off, it pulls right back. We get this deep move, pulls back, and then we start to see higher highs and higher lows kicking off again. And I think that's how I would like to get involved with this. See if I can find an example. This occurs quite often. I'm just trying to find a bullish example where it gets overextended. This is kind of it, right? Where we get, it overextends here, and then you get this deep pullback, and then it continues on, overextends, and then we get a deep pullback, right? So the trend isn't as clean as you'd want it to be. Back down in here, look, low to high, retrace, buy, low to high, people are going to, well, where do you get involved? Retrace, buy, low to high, retrace, and then people get caught out buying on this 50%, the Fibonacci pullback of that, and then it tanks, and it's hunting the liquidity. Look at it. All this sell stops that are sitting under here, it hits it with a vengeance. All right, so just watch out for that. Then I'm looking at this, trend. Nice, clean trend. Everyone gets into the habit of buying on the swing, stops under the previous low, and then you get that. All right, so at the moment, I'm contemplating the possibility that that's going to happen. Why? It's overextended. It's traded into, look, liquidity. And look, you grab this anchored VWAP if you like. I've done this in other videos. This is actually quite a handy tool. Pull it from the previous swing low here. Just anywhere down there will do. Anchored VWAP. And what we've got with this is, should be on maybe an hourly chart or a 30-minute. Let's just go down to a 30. What does that look like? Yeah, I don't mind that. Okay, 30-minute chart. You want to look at, and it's just adding to what I was talking about, really, how this gets overextended, trades into liquidity. But with this anchored VWAP, you want to follow the mean. And at the moment, we're currently 2 deviations out. So I'm expecting, if we hit 3 deviations out, look out for that. I guess that's what I'm saying. Now, what else can I say about this? The way that I would want to get involved with this is going to be, we know that this is resistance, right? So this is how I want to get involved. I'm just going to mark that up again. Okay, it's overextended. I don't really want to go long here, even if it does push up. Now that could be a day trade or whatever, but I'm expecting or half expecting either here or there, right? But yeah, and then it's trending again, right? I want it to hit this liquidity under here, and I'm going to be waiting for a deep pullback, and then it starts trending. We get this rotation, higher highs, higher lows, and what you can do is look at this from a higher time frame perspective. Pull your Fibonacci from the swing low to the swing high, and see the 50 to 61.8, that's my point of interest for a buy, to get involved with that. Only if it pulls back down in here and then we see this start to shift, break structure like this. Right, well let's just do that. Break of structure. I don't know. Hang on. You see what I'm saying? Like it's trending down and then you want to see it break structure and give you higher highs, higher lows, and it starts trending up. There's a higher high, higher low, okay? So you want to see that. And I want to see that occurring after a deep pullback into these levels and it turns around, right? So that's my take on gold at the moment. I won't be getting involved long at the top. Up here, I want to see the pullback, guys. I'd really love to hear your comments on this. Definitely share your thoughts. And with that, before I leave, this pullback and rotation can occur anywhere. It doesn't have to be. I'm not marking up this chart predicting that it's going to be here. It could be here, it could be down, it could be here. But it's wherever it pulls back and starts to rotate. But I want to see at least this low taken out here. Preferably that and this one, maybe. I don't want to see it pull back down into these levels. Let's just mark it up as a liquidity pull. Liquidity, yeah. I want to see it attack sell side liquidity under these levels here somewhere. Okay guys, that's my take on gold at the moment. With that, I hope you have a great day. Safe trading. See you on the next one.